The content on this channel is for educational and informational purposes only. Nothing we say or do should be considered advice. No tax, legal, accounting, investment, or any other kind of advice. Anything you invest in is at your own risk. Do your own research and consult with professionals.
Hey everyone, welcome back to Bytes Digital. Thank you so much for coming onto the channel today. If you're new around here, please consider hitting that like and subscribe. Today is going to be my absolute pleasure to walk you through on what is MakerDAO and why it matters. MakerDAO is a cutting-edge new age DeFi platform that since 2015 has been redefining the role of a stablecoin and has been a major narrative driver and a huge share of the stablecoin market cap growth. If you're not familiar with what a stablecoin is, if you have no idea what I said about MakerDAO makes sense to you, don't worry. We're going to be breaking down all those key components in today's video. There are three main tokens that we're going to be focusing on in today's video: Ethereum, DAI, and the Maker token. These tokens have crucial roles throughout the platform. And it's important to remember that in today's world of MakerDAO, you can access multi-collateral DAI. But for this explanation in this video, we're strictly going to be covering it as if it were single collateral DAI with just Ethereum. If that doesn't make sense to you, don't worry. We're going to get into it. Just wait. Let's go ahead and hop into what is MakerDAO. When it comes to MakerDAO, I enjoy considering in a specific analogy. Let's consider MakerDAO as this autonomous organization that exists to strictly perform the role of a bank that only deals with potatoes. Let's say that their only interest as an organization is to make sure that they can take people's valuable potatoes, store them in a very safe location, and then they allow for their users who provided them their potatoes to take out a new, freshly minted package of certified French fries. Let's get into what I actually mean about that, and let's actually harvest all this knowledge about MakerDAO. The first thing that's important to know about MakerDAO is the main product of this platform. And recall that I called it a kind of pseudo new age bank. Well, the main product of this decentralized bank is going to be DAI. And the key component of the fact is that when it was originally conceptualized, the major cutting edge component of the DAI token was the fact that it was a decentralized stablecoin. Stablecoin is just another way to reference a cryptocurrency that has a pegged value to that of another currency. In this case specifically, a stablecoin like DAI is going to be pegged to the value of $1. And it is available for fresh minting into the supply, which is just adding it back into the supply, similar to how a novel modern infrastructure bank would do for a federal government and fiat currencies. They would essentially create new actual money into the supply. And so MakerDAO takes on that role of performing of an actual central bank. And in this world, they call those lines of credit to mint new DAI as CDPs. They call those lines CDPs, which are collateralized debt positions. First up, let's try to understand and unpack what is really going on with it being stable. One of the key mechanisms that have been implemented in MakerDAO to keep the peg of one DAI worth $1 is a module known as the peg stability module. Just think of the peg stability module as essentially this vault that is operated and owned by Maker that offers a continuous trade opportunity for any other stablecoin that they have offered in the vault in exchange for DAI. And you can do this back and forth. In current times, you can go to the Maker Vault and actually swap your DAI for USDC at a 1-to-1 rate. And this is actually very, very important role in the market behaviors of everyone else. Having this peg module actually there is going to incentivize and further drive this market behavior known as arbitrage. Arbitrage is essentially where a crypto user will go to the MakerDAO and buy their DAI exactly at the $1 mark. Well, let's say there was a severe demand of DAI on the Coinbase platform, and DAI was starting to be depleted in supply and therefore being increased in value and is trading slightly higher because it's a much more scarce resource on said platform. So a user will go to Maker, they will be able to swap for DAI at a 1-to-1 ratio and receive full amount of DAI. And then they'll take their said DAI that they purchased at $1 and they'll be able to go to Coinbase and sell it for the slight premium if it was trading at, let's say, $1.05. And so this genius cryptocurrency trader has managed to arbitrage a profit of 5 cents. And this kind of bit market behavior is actually incentivized because it creates an environment where traders and market participants will fight and actually perform this behavior of making sure that more supply is introduced or more supply is removed, depending on the direction of the peg. Next up, it's important to understand what this whole CDP and loaning situation is. So far I've told you that a user can basically come to MakerDAO and provide their valuable potatoes. And in this scenario, the potato is going to be your Ethereum. Everyone wants to keep their potato. It's extremely valuable, non-perishable, and extremely volatile. So it's a little risky to take your potato out here and create a debt position. But we'll touch on that more later. In the cut and dry way, a user will come to MakerDAO and provide their Ethereum. It's important to remember that there is a dust limit, which essentially just requires that a user to have a minimum of 10 Ethereum to deposit it into the MakerDAO vaults in order to open up a new line of credit for DAI. This is a kind of a way for the platform to incentivize more stability because with the appreciation of prices, with the appreciation of Ethereum, and the overall market congestion on the Ethereum mainnet, MakerDAO has determined that operating vaults for less than the 10 Ethereum minimum is actually pretty difficult. So in order to kind of increase the sustainability of the platform, they have created and instituted this dust limit. Once a user actually provides their Ethereum to the MakerDAO platform, it is basically passed on to MakerDAO to execute the transaction and perform the role of being a pseudo decentralized bank. They use this via a complex system of called smart contracts, which are just interactive code that basically executes essentially an agreement between two parties, being the user who provided the Ethereum and MakerDAO being the vault container. So a user will provide their Ethereum. MakerDAO will take this Ethereum and take care of it. They will put this potato in a reserve of potatoes and just keep it locked up in this one little agreement for this other user, for that user that provided it. And then MakerDAO decides, okay, since you gave me your Ethereum, I'm only going to give you a certain amount of French fries according to how much Ethereum or how much potatoes you gave me. And so, thus, MakerDAO will actually print and create new French fries. They'll start slicing them up and they'll certify them to be valued to the peg of $1. And so, all your DAI is going to be that stablecoin form where it's worth $1. This is going to basically create a situation where a user receives the DAI and the maker debt position. Let's consider the example in the middle, where a user effectively can open up a position where they're at 200% collateralization ratio. And typically 200 to 250% is quite safe. And the MakerDAO platform requires over collateralizing, which is essentially means you have more collateral than you actually borrow. You have more potatoes than you actually get of French fries. And in this example, let's consider 10 Ethereum. A user with 10 Ethereum comes to MakerDAO. They can take out a loan of up to 8,000 DAI, and that would be a ratio of about 200%. Because if a user were to swap for 10 Ethereum to straight up DAI, it would essentially be worth 16,000 DAI. That is a very valuable position for a user to have, considering that they have stretched their capacity of their actual portfolio, but it is risky. And it's important to understand that this is a debt position. When a lendee receives their DAI tokens, they have essentially created a agreement where that either they repay their debt or they will get forcibly closed. And this is very, very interesting in the context of the crypto marketplace because liquidations are very common due to the volatility of the markets. When your value of your potato goes down, MakerDAO has already given you their French fries. And in order to make sure that they didn't get cheated out on the French fries they gave you, they will actually basically execute the closure of the agreement. And if it falls beneath the minimum threshold of collateral ratio, then they will take out a chunk of your collateral and they will charge you a penalty fee for getting liquidated and you will get back a X amount, but it will be severely diminished because You didn't actually pay off your loan. It was forcibly closed. And when it's forcibly closed, a liquidation event is pretty intense. And so those are the mechanisms for actually borrowing on the MakerDAO platform. And let's dig a little bit deeper on the actual debt position, which is denoted in Maker tokens. Let's focus on the Maker token for a minute. Now that you know that you open up this line of credit on the Maker platform, it is only denoted as a form of how much DAI you received, but the interest that is accrued and developed is in the form of Maker tokens. And so this is the third token part of this entire equation. And it plays a fundamental role throughout the platform. And there are three main components to the Maker token. One is the utility aspect. Two is the resource aspect, and three is the governance. Let's hop into the utility component. The utility component of the Maker token is pretty straightforward. When a user opens up a CDP or takes out a line of credit for some DAI, when they want to close their position, a intelligent crypto trader will actually go to the platform, give back their DAI, and then pay their stability fee, which is essentially just the accrued interest. And that interest fee will fluctuate according to how the governance of the platform goes. Because remember, this is a bank, interest rates are going to be changing according to how those that run the platform actually want to change it. And so when a user actually closes this position, they pay that fee in Maker tokens. It is an actual viable use case for the token and plays a fundamental role in the entire platform because MakerDAO does take that Maker fee and deposits it into the actual MakerDAO treasury. Next up is to understand the economic stability component to DAI. First up, let's talk about what is truly going on the platform. And as there's just a quick refresher, a user goes to MakerDAO, gives them their Ethereum, MakerDAO keeps their Ethereum, and then MakerDAO determines, according to an agreed upon collateral ratio that a user can define, they will give that DAI to the user. Now, user can go on and do whatever they want with that DAI. They can go buy a tuxedo and have a glass of champagne if they want and enjoy their merry day. But let's consider a scenario where there is some severe, catastrophic, cataclysmic price action for the Ethereum token. Let's consider a absolute market crash. Now, all of a sudden, there is cascading liquidations. The platform has to enforce the mass closure of contracts and all of these different lending positions. And this opens up the opportunity for the MakerDAO platform to actually be incurring losses when these positions close so quickly and so drastically. There is a buffer that is created that exists for the MakerDAO that exists in the form of DAI tokens, which is just there sitting for MakerDAO to use in case of liquidity shortfalls. Basically, an insolvency situation, this DAI would come in and solve that insolvency. When that system does not come through, there is a mechanism to where the Maker token itself becomes almost as a resource currency for the platform itself, where all the Maker tokens that were generated through paying off the fees get sold, and that generates new liquidity for the platform to match all of its debts after major market moves. Next up, it's important to understand the governance component, which the governance component is very extensive and is very contentiously debated to this day. There are a lot of the features that I've discussed in today's video that are still being discussed on how to improve them or how to completely even remove them from the platform. And so with all that debate, it will be covered in the next video. So definitely stay tuned to understand what is going on with the governance of the entire DAI credit system. Let's consider why Maker was even made. Because right now, if I were watching today's video, I would ask the question, why would a user even go to Maker if they had 10 Ethereum and when they could just sell it and swap for $16,000 worth of DAI? Why would they even want to get a loan for $8,000 when their original collateral is worth 16? It doesn't really make sense. But let's consider a new kind of paradigm of thinking that was being born around the time that MakerDAO was being created. Back in the time of 2015, MakerDAO was being made when stablecoins were predominantly centralized. And one of the key components about the DAI token is that it is not fully backed by real cash US dollars. And the USDC token, for example, is. And there is an off chain cash reserve that is providing the backing for the USDC stablecoin. In the case of DAI, that is not necessarily true. There is the mechanism to trade for one to one, but is not necessarily backed by a real liquid cash reserve. there's going to be always that kind of decentralized component innately to the DAI token. However, that is contentiously debated regarding the fact that it is traded for 1-to-1 by USDC. Regardless of the reality of that debate, the DAI token has improved basically options for all investors in the space, because now anyone can go to the MakerDAO platform without facing KYC, without having to deal with liquidity problems, with having an off-chain reserve for a specific stablecoin, and just having overall access to a stablecoin completely global, completely away from a KYC requirements. 2 out of 5 degens complained about cryptocurrency price volatility. And then the MakerDAO platform actually came out and released their certified stablecoin DAI. And that is going to be the french fries of this entire video. It is what everyone likes to go use and use individually and spend it on different things. And if you think about it in the mindset of a crypto user who's extremely bullish on the future of Ethereum, when they open up that actual CDP position, they are still exposing themselves to both the lower end and the upper end of price volatility of the asset Ethereum. So if you're ultimately bullish on Ethereum, it would be logical for a smaller user to consider opening up a credit line to maximize efficiency. And there are scenarios where a user will go to get some DAI tokens and then they will swap it for Ethereum and re-provide it, which is a strategy known as looping. That is obviously not an endorsement to do that strategy, because it's quite risky to do, because you're just multiplying how much risk you have to pay off the vault. But beyond that, it's important to recognize that now there is a decentralized stablecoin that will remain non-volatile, and it also provides a unique use case opportunity for all the crypto degens to actually play with some leverage. It's important to remember that the over collateralization of the MakerDAO vaults has provided for a very safe environment for the DAI peg to exist, and it has maintained a very stable condition since the peg stability module was implemented. Right now, depending on the collateral, because remember, there are more than just Ethereum vaults available on Maker. You can open up positions with other assets. Right now, the borrowing limits are going to be put at about 130 to 185%, which is essentially your ratio of how much DAI you could get according to how much Ethereum you provided, or other assets. And this collateralization system has been very sustainable for MakerDAO and will continue evolving as the platform continues going through governance changes. In order for MakerDAO to effectively provide affordable fries to the thousands who need it, MakerDAO is going to have to be effectively managed. And remember, it is a DAO, a decentralized autonomous organization. And via the Maker token, it is governed. So there's an entire world to discover. A very contentious and a very heavily debated portion of the existence of MakerDAO is going to be covered in tomorrow's video. So definitely stay tuned for that. All right, everyone, that's going to be it for today's video. I hope that after all that, you have a greater and better understanding of the MakerDAO platform and how DAI, the actual currency, works, and how the Maker token plays a unique role in managing the entire platform. But in the next video, we're really going to be digging into the management component of about how MakerDAO is more than just a utility and a resource currency, but a very powerful token in the management of this entire credit system. So without further ado, just please remember to hit that like and subscribe button. If you're new around here, don't forget to hit that notification icon. We used to be a very predominantly Terra focused channel, and I know that everyone here was a very big fan of UST, but with the failure of UST, I've been doing much more research on stablecoin models themselves, and we have a lot more stablecoins coming into the market, considering the Aave Go stablecoin, as well as the Curve USD, which hasn't been really confirmed all the details on. But regardless, there are many more stablecoins coming into the market, and I'd love to cover those as well. If I covered anything mistakenly in this video, if I made a mistake, or if you have any opinions on the MakerDAO platform, please drop them into the comments. I'd love to hear what you think. I'd love to learn from what all you crypto geniuses have to offer. So please remember to hit that like. Thank you so much for watching. Take care.